Hello, guys. So we are now with Haseeb Qureshi, managing partner of Dragonfly Capital. Great to have you here, Haseeb.
Thanks for having me.
So can you tell us about your journey in crypto? I know you were a former poker player. So how did you get to being in the crypto industry?
Yeah, it's a long story. It's funny, there are a lot of poker players who found their way into crypto, but everyone's story is a little different. So I was a poker player from when I was 16 years old until I turned 21. I was very successful at a young age in poker, but eventually decided to leave poker and go into the tech industry. So I was a software engineer at a company called Airbnb in San Francisco when I first caught the crypto bug. At that time, that was about 5 years ago. So that was mid 2017 when the ICO boom was really starting to take off. And I remember I'd known about Bitcoin for a long time before then. I think I bought my first Bitcoin in 2015. And then it was when Trump got elected that I actually bought a significant amount of crypto. That was like the first thing that I thought, like, okay, Trump got elected, like the world's probably going to hell. And so I should, buy some Bitcoin as like a hedge on the world exploding, which turned out, of course, to be the wrong thesis at the right time. And but while I was at Airbnb is when I really came to understand much more about the financial system, because at Airbnb, I worked on payments fraud. And, Airbnb, obviously we pay, it's an international company. And so you're paying people in, 50 plus countries around the world. And working on an international payment system, you realize that there is no, from the experience of a customer, you swipe your credit card and then somebody on the other side of the world gets paid. But in reality, on the back end, there is no single system that pays everyone all around the world, right? The sense that there's one software thing that stands in between everyone in the world is a lie. In reality, there are many payment systems all around the world, none of which talk to each other, and all of which were built 50 to 60 years ago. And so none of them are real time, none of them are digitally native, none of them are, sort of global and borderless. But that's the way that almost everything that we think about as part of the modern digital economy functions. And as a software engineer, you see this and your first instinct is, oh man, we should throw all this away and we should start over. We should build something that corresponds to the constraints of the world we actually live in today. And it clicked for me that that's what crypto is. Crypto was a bunch of cryptographers and engineers and computer scientists and economists who got together and said, knowing what we know today about peer-to-peer networks and distributed systems and cryptography and monetary policy, how would you design a monetary system differently if you could build it from scratch? And each of these different cryptocurrencies was a different answer to that question. And I became totally convinced that the way that we do money in the year 2080 is not going to be the way we did money in the year 1980. And today it is. Today, there's basically no difference between money in 1980 and money today. And that's going to change. And crypto is going to have a role in how the future of money is going to look different than it does today. And that's what convinced me to jump into the space full time. I got my start as a software engineer. I was at a company called 21, which got acquired by Coinbase. Then I started my own startup working on a stablecoin. And then I ended up coming onto the investing side, got my start at MakerDAO Capital, which is one of the very earliest crypto funds that was founded by Naval Ravikant. And then I came on board to Dragonfly, where I'm now a managing partner. And Dragonfly, we're one of the largest crypto funds in the world. We're very global, and we invest into early stage crypto and blockchain technology.
And how is it different from you for you to be first on the project side and now on investing side? So you were in the shoes of those founders, of those managers, and now you're deciding whether to invest into them or not.
Yeah, it's helpful because I have a better perspective on what it's like to be a founder, and also how to think through the kind of concerns and the strategy that a founder is thinking about. At the same time, look, I didn't found a protocol or become super successful the way that some of the folks I really respect in the space who are great founders have managed to build. But I've done enough, and I'm also myself a builder and a technologist, that I have the same intuition and understanding of what entrepreneurs are building. And that helps me both in terms of empathizing with founders, but also being able to sit down shoulder to shoulder with an entrepreneur and help them think through how to build and scale their business, how to recruit great talent, how to build something that people are going to want in the crypto world. at the same time, I do, when I first started as an investor, I had a lot of envy for the entrepreneurs. I always felt like, oh, someday I'm going to I'm going to invest for a little while, but then eventually I'm going to go and become a founder myself. And that's really what that's really what I'm born to do at the end of the day. And I no longer think that. All of the envy that I had for entrepreneurs has completely gone away, because I see how absolutely freaking brutal it is to be a founder in crypto, where you have token holders who are yelling at you, you have investors who are yelling at you, you have the SEC who's yelling at you, you have your employees who are yelling at you. Everyone is constantly mad at you if you're a founder, and there's no rest. It's all 24/7. It's all crazy. It's hard to know whether you even have product market fit, even if your token is worth a lot of money, or even if it's worth a little bit of money, but a lot of people are using your product. It's very hard to tell what the hell is going on. And I compare that to my friends who are founders outside of crypto in regular tech, where it's like very easy to understand. It's like, okay, you have this many customers, these people like your product, you have customer support, and you get to go home at 6 o'clock, and you get to have a relationship with your significant other, and life is very simple. And so I've come to appreciate how difficult it is to be a founder in crypto. But the people who do it and the people who are successful at it are absolutely amazing individuals. And I have nothing but respect for them. But I don't think anymore that I'd want to be one.
And as an investor in the venture capital, you need not to see only the current trends, you need to predict the trends for the next, at least, I guess, 3 years. And there are a lot of different lockups for the tokens and etc. So how do you define the next trends? How do you know that maybe in 1 year, in 2 years, that will be a big thing?
That's a great question. And I think the honest answer is that we don't predict what's going to be the next big thing in 3 years. The reality is that nobody knows what's going to be the next big thing in 3 years. I can tell you, having invested in the space for long enough and knowing all of the big funds, that everything that people thought in 2017 about what was going to be big was basically wrong. And the same thing in 2019, what people thought was going to be big was basically wrong. The way that I see it is that, look, if you go back to the blog posts people were writing in 2017, and the blog posts people were writing in 2019, and the blog posts people are writing today, you look back in 2 years, well, you realize that most of the things they predict are not right. And that there are things that happened that they didn't predict, and the things that they thought were going to happen, most of them didn't happen. And the job, in my view, of a VC is not to try to predict the future, because no one can predict the future, right? You can just look back and see that no one got it right. No one guessed that Uniswap was going to be huge. No one guessed that NFTs were going to be massive. No one guessed that, blah, blah, blah. All these things took us by surprise, right? The thing that you can do, and this is, I think, the principal skill of being a great VC, is not to predict the future, but to notice the present. When we invested early into DeFi, right, we were investing into MakerDAO, Compound, DYDX, 1inch, UMA, all before summer 2020, when DeFi summer took off and DeFi started becoming a huge thing. Back in the day, people often view our investments there as like, wow, how did you predict that DeFi was going to be big? And it's the honest answer is that we didn't know. We had no idea that 2020 that things were going to explode and become really huge, and that these protocols were going to gain tens of billions of TVL. We thought it would take a decade for these things to get big. But the thing that we did realize, not that DeFi was going to be the future, but we realized is that there are all these guys sitting here in a corner tinkering with these little things called DeFi. I mean, the term DeFi wasn't even invented back then, but these little financial projects, in their little garages, right? And that these things, if they worked, they could really be big. They could really scale. And they had proven that they worked at a small scale, and that if you just make the numbers bigger, the whole thing still works. And we noticed that people were building these really innovative things, and that someday they could be a lot larger. In the same way, we noticed that Ethereum had all these weaknesses, and that these alternate layer ones, we did the seed round of Avalanche, investing early into a project like Avalanche or Near Protocol, that these founders really figured out something that Ethereum did not get about how to scale a blockchain, how to make it more efficient. It was about noticing that fact, but we had no idea that these things are going to be worth 30 billion, and it's 2-3 years, and that NFTs are going to be big, and this thing was going to be big, and DeFi was going to be big. And that is still the way that I approach investing. Is that today, look, I don't know what is going to be big in 3 years, but I see my job as figuring out what is it that are the most fascinating things that people are working on that are driving toward what could be a potential future. Noticing that and backing the best people who are working on those things. That is the only way, I think, to be an effective investor into crypto.
So what are the most fascinating things for you for now?
The most fascinating things for me for now. There's a lot of stuff very fascinating right now in ZK technology.
Mm-hmm.
And it's very clear ZK technology is very rapidly progressing, but there aren't a lot of commercial applications right now that are very interesting. So, right now, if you look at what's live, you've got, ZK Sync, which is ZK proof-based blockchain. There's Starkware, which works with DYDX and Diversify and Immutable X. There's, a few other things, but the reality, the totality of all of this is pretty small. It's not a big part of what's going on in crypto, and they're not very versatile today. But there are a lot of people who are working on how ZK technology can potentially become much more efficient, much faster, much cheaper. Using recursive composition, you can sort of prove multiple different proofs inside of one proof. And it opens up a real gateway into what the future of blockchain scaling would look like. But it's many, many years away. Who knows how long it will take? It could be 3 years, it could be 5 years, it could be 10 years until this stuff really goes mainstream. But right now, it's very clearly where I'm seeing some of the smartest people and some of the most difficult problems being tackled. And one thing that people commonly think about VCs is that VCs invest in things that can quickly become liquid. They say, oh, buy 1 year lockup, and then you dump the tokens on retail and blah, blah, blah. And there are some VCs who do that. There are some hedge funds who do that. And you can make money doing that sometimes. Sometimes you lose money doing that because, like anything, not everything always makes money. But that's not how the big money gets made. All the firms that have really made really significant returns, they do that by backing people who are solving really hard problems. And really hard problems take time. They take capital, they take time, they take innovation. And if you look at the most successful projects in crypto, like Solana or Avalanche or even Uniswap, they took years to go from idea, R&D, production, and then scale. It took a very, very long time. Whereas a lot of projects in crypto where it's like, oh, I launched this NFT, I launched this DeFi thing. It's like, you fork something, it takes like 2 months, and then you launch the token, and then everyone's liquid within, a very short amount of time. That's a game that you can play. It's not a game that we play, and most of the big VCs don't participate in those kinds of projects. But it's almost never where the most returns are located. The most returns come from solving hard problems. That's why they're hard. And in the same way, most of the innovations that I'm excited about are things that are going to take many years to come to fruition. But when they do, I think they're very likely going to be the next generation of what's important in crypto.
And do you think that ZK knowledge proofs can change the current financial system, the current banking system?
I think it's possible. I worry less about what's going to change the current banking system because, so much of crypto is about building something in parallel to the current banking system, and it's kind of like, it's kind of like how America broke off from England. It's like you could sit around and say, like, how do we reform the monarchy, and how do we create a better parliament, and how do we do whatever? Or you're gonna say, like, you know what, screw it, those guys are really far away, they're really old, like they've got their own system. Let's just create a new one and make sure this new one is awesome. And that's increasingly the view that I take with respect to crypto, is that, look, crypto is creating its own set of institutions and its own set of norms and practices. And it's not our job to drag, traditional finance kicking and screaming into the future. It's up to them if they want to stay where they are and not move. But what you're just going to see is new alternatives arising that are more efficient, more scalable, quicker settlement, fewer UX hurdles. And all that stuff will just make people come over. It'll make institutions come over. It'll make big traders come over. And I think it's gonna look more like that than it's gonna look like the internet reforming newspapers or reforming TV stations, right? Like that's not the right mental model for how the internet ended up changing the future of media. In the same way, I don't think that's how crypto is going to change finance.
I got you. And now we have quite a big hype around NFTs, gaming, metaverse. What are your thoughts on that?
That's a big question because there's a lot of components to that. I do think NFTs are here to stay. I don't think NFTs are going anywhere. I think we're going to figure out more dynamic use cases for NFTs. I mean, we just saw yesterday the biggest hack in on-chain history. Axie Infinity got hacked for $600 million. Someone was asking me like, okay, do you think this is the beginning of the end of Axie Infinity? And I think probably not. I think that this isn't going to be the thing that causes people to lose confidence. But I do think that fundamentally Gen 1 of play to earn gaming, which is, the Axie Infinity and the kind of, the Axie Infinity type knockoffs that are more about earning money and more about tokenomics than they are about a game, than they are about having fun with your friends, which is like what normally, when people think about gaming, normally it's like, oh, having fun with people you like. That's not how anyone thinks about Axie Infinity, right? Axie Infinity is like this big, complicated financial game we're all playing together. And I think there will be a subsequent generation of crypto gaming that is actually fun, that is about fun first, right? Like when you think about playing a fun game, you don't think about how much money you're making per hour. We will get there. And those games will be augmented by crypto and by digital ownership and potentially by NFTs. But that's not going to be the main point. The main point of a game is always to have fun. That's why people play games. I think that will indeed be the way that crypto gaming evolves past the current generation of crypto gaming. So that's my broad view there.
And do you invest in Dragonfly into any gaming metaverse projects?
We've invested in several.
So what projects are in your portfolio?
So I can tell you the ones that have been announced. So we invested into Cypher. We invested into another project called Shrapnel, which is like a first-person shooter powered crypto game. And there've been a few others, but we've been relatively judicious in choosing our partners. Oh, we also invested into Lava Games, which is building a game called A Faraway Land. But the overall strategy for us is that, we really want to be partnering with people who have a clear vision about how to build a game that is fun first and that is sustainable with respect to its economics. And that is, I think it's going to take some time for the market to understand why that matters. And, it will eventually be the case that it's going to be gamers who find their way and ultimately choose what's going to be the successful crypto game, not crypto people who choose the successful crypto game.
And when you decide whether to invest or not into these or that projects, what are defining factors for you?
In a gaming project or just generally?
General.
So there are basically three basic components to underwriting an investment. You sort of think like the triangle of the most valuable parts of an investment. The first is team, the second is market, and the third is product. And different investors value different ones differently. Like some investors care more about the team, or it's like, look, I just want to back a great team, even if the product is not really fleshed out yet or the market is not proven yet. I'm just going to back great teams. And there's some investors who are like, look, this is a hard market. I'm just going to bet in everything in this market as long as like the team and product are passable. And there's some that are like, look, I just want to see great products. If you have an amazing product, I'll back it, regardless of the team, regardless of the market. Like I just want to bet on great products. I'd say of those three, we probably skew more towards team and a little more towards market. And so we look for great DNA of the people who are building something. But naturally, as a project gets later and later stage, when you move from seed, and seed, I think it's primarily about team and then a little bit about market. Once you move into Series A, it becomes a little bit less about team, more about market, and a little bit more about product. And once you move past Series A, then it's like more and more product and market and much less about team. And so the reality is that as you get later and later stage, it becomes less about telling the story and more about show me the money, show me the metrics, show me the adoption, show me the traction. And if you don't have that, then it becomes very difficult to underwrite an investment into a later stage deal.
And as well, you mentioned that you invested into different layer one solutions like Avalanche, Nia, Cosmos. So do you believe that the future is multi-chain?
I think the debate is not a debate anymore. Like we know the answer now. The answer is that it's multi-chain. So I don't think anybody is seriously arguing anymore that there's going to be one chain to rule them all.
And what does define the success factor of this or that layer one blockchain? Is it TVL? Is it the number of the users? Or what are the most important things for you?
Yeah, it's multidimensional, right? It's like asking, what is the most important thing for a country? Is it population? Is it GDP? Is it like quality of living or quality of life? The answer is that, well, all these things matter. And it's like kind of it's like, would you rather live in, Switzerland or in Bhutan? It's like, well, I mean, I don't know, it's a complicated question, right? The same thing I think is true for layer ones, is that, if you just look at market cap, then it's like, okay, Cardano. If you just look at, the number of transactions or number of users, then okay, Binance Smart Chain is your number one chain, right? So the answer is just quite multidimensional. All these things matter. Decentralization matters. Number of developers matters. Innovation matters. Throughput matters. Market cap matters. All these things are inputs into what makes a great layer one. But none of them alone, like if you sort of, if you ramp up too far on any one dimension to the expense of all others, then you end up with a very, very weird, a very, very weird layer one. And I think you generally want to avoid that. It's like, there are places that are, you go to like Monaco, right? Monaco is like extremely wealthy, extremely high GDP per capita, but like it's not the place where you'd want to go start a family is in Monaco. And so I think the same thing applies to layer ones.
And what's next crypto trends do you see?
Next crypto trends. Certainly there's a lot of chatter going on right now about interoperability. I think that's probably one of the big stories of the rest of this year, is figuring out how within the multi-chain universe, how blockchains are going to interoperate and how they're going to communicate with each other. I think that's one of the big unsolved problems yet today. I think also we're getting to the point where we're starting to see the next generation of DeFi beyond the core primitives of AMM and borrowing and lending, which are like kind of the two main things that are working today. I think we're going to see a lot more things start to work in DeFi over the next year or two.
And can you share some your recent investments in Dragonfly Capital related maybe to cross-chain, etc.?
Our recent investment. So we did make an investment into a cross-chain protocol called Axelar, which is a cross-chain interoperability solution. That was a recent investment we made. I'm trying to think of what was announced. We recently we did a round into a project called Gem, which is a big NFT aggregator. They're actually about to start adopting cross-chain aggregation as well. What else have we done? Yeah, I have to look up and figure out what's been announced and what hasn't been announced. So I make sure I don't want to step on the toes of any of the entrepreneurs that we've been backing.
Yeah, I guess a lot of things happening. And so, do you have any favorite altcoin picks currently?
Do you have any favorite altcoin picks? You know what? I'm going to punt on that question. I want to be careful in making investment recommendations because usually people pay me for that.
Okay, so people can just follow your portfolio companies and make their bets on their own. Okay.
Exactly.
Thank you for a great discussion. It was nice to talk with you.
Likewise. Thanks for having me, Anna.